Welcome to Democracy Does, the Civic Power Playbook, a podcast that cuts through the noise to explain what's really happening in our democracy. Each episode breaks down key issues with insight from policy experts and change makers, giving you clear tips to take action. Whether you're fired up or feeling stuck, you're in the right place to get informed and get inspired, because democracy works best when we all participate.
Hi, everybody, and welcome back to another edition of Democracy Does, the Civic Power Playbook. I'm so grateful to have you here because we have a terrific guest with us today. March, as we know, this first week of March is National Consumer Protection Week, raising awareness about avoiding scams, identity theft, and overall knowing our rights as consumers. So it is timely and appropriate that we have Professor Terri Friedline, who is a scholar and expert on consumer protection. She is a professor of social work at the University of Michigan and is author of Banking on a Revolution: Why Financial Technology Won't Save a Broken System. Professor Friedline has also served as a member of the Consumer Financial Protection Bureau's Academic Research Council. Thank you so much for being with us today.
Thanks so much for having me. I'm looking forward to it.
Yeah, I'm happy to have you on because so much is happening now that directly impacts consumers, and I don't think people understand exactly the ramifications of what those changes in policies are going to mean for them. Let's start with the landscape for protections for consumers in general. It's undergoing a significant change right now. So, first of all, when I throw out the word CFPB, a lot of people don't even know what that is. So, what is it and why is it needed?
Well, the CFPB, the Consumer Financial Protection Bureau, it's a federal agency. It's the newest federal agency that really centers the experiences of people in the economy and especially the financial services marketplace, so the financial sector. Um, there's a set of federal agencies that are designed to pay attention to and regulate the economy in the financial sector. So banks, lenders, other types of financial services companies. Um, and it might be helpful just to lay out what that landscape is. So the Federal Reserve deals with inflation, unemployment, maintains financial stability. The Treasury Department puts currency into circulation. It manages government debt, collects taxes through the IRS. Many people know about the Federal Deposit Insurance Corporation, or the FDIC. It supervises some banks, and it also provides the government guarantee or insurance that protects the money in your bank account. So government insurance up to $250 in your $250,000 in your bank account. None of these agencies or departments really puts people and their experiences at the center. There is the Federal Communications Commission that has a consumer policy division. This includes some financial services oversight, like making sure your bills are correct, regulating telemarketing. But really, the main agencies that oversee the economy and the financial sector have centered banks and lenders and other financial services, not the experiences of people. And this is really what the Consumer Financial Protection Bureau, kind of as its name implies, is what it was set up to do or intended to do.
Okay, so it was there for protections for the consumer, directly for the consumer. What does that mean? What does that look like? What kind of protections do they provide to the consumer?
Sure. So, the CFPB was set up at a time when people had really been exploited in the marketplace. It was established in 2010. This was after banks, lenders, other financial services made subprime, meaning really high interest rates, not very good terms. They made these loans, mortgages to borrowers. The housing market crashed, and this was one of the deepest economic recessions in 100 years in the United States. Millions of families lost their homes, and it especially wiped away wealth of Black and brown families who had been targeted by these banks and lenders for these risky mortgages, even though they qualified for better terms. And so the CFPB was established in response to these events, to be an agency that says, okay, we don't want banks or lenders making loans that are going to put people at such dire risk of losing their livelihoods, of wiping away their wealth, of trapping them into debt, and to regulate and oversee some of the nation's biggest banks in ways that avoid some of these everyday problems that we might have, getting charged more than we should,
Hmm.
um, having less recourse to use our money because banks and lenders are tacking on extra fees to the services that they're offering.
Okay. Excellent. Thank you for explaining that in simpler terms. Just out of curiosity, what did you do when you were the Bureau's academic research, when you were on the council, the Academic Research Council? What did that look like? What did you do? And what'd you find?
Um, this was a really interesting time to be on the Academic Research Council. So I was appointed in 2019. The CFPB has a couple different advisory councils, some that's focused specifically on consumers, on credit unions. My expertise is in research. And so I was on this research advisory council, seeking to sort of guide the Bureau's efforts in this area. So when they collect data, when they write reports, we met pretty regularly in Washington, D.C. We talked about emerging research, new evidence, new issues that were coming up for consumers, like digital financial services, cryptocurrencies, payday lenders, disclosures, student loan debt, medical debt, and reviewed some of the work that the Bureau was producing. Um, I'll just know maybe this was an interesting time to be on the advisory council because it coincided with the Trump's first presidential term. And so it was a time when Steve Mnuchin was appointed um, to be an interim director, and then an appointment of Kathy Kraninger. They did a lot of work to walk back at that time some of the rules that the agency had put in place on payday loans in particular. It was really a beginning of the dismantling of the CFPB when there was the Bureau wound down some of its enforcement, dropped settlements, clawed back regulations that, had gone through a pretty lengthy rulemaking process. And of course, this is right what is accelerating now under, Trump's second term.
That leads me to exactly to my next question then, because the current administration then, now, and when you were on the council, they have been significantly cutting back and rolling back certain policies. So I want to go through a couple of things and ask you, what does that mean and why is this problematic? So first of all, one of the things they've changed, a cap on credit card fees. Tell me what that means now.
So the Bureau has spent time doing research and studying and hearing from banks and lenders and credit card companies, but also people, again, sort of understanding people's experiences in the marketplace. What it means to have a revolving credit card debt, a cap on credit card fees at 10% is much lower than a 25% or 30% cap, meaning that people aren't going to be accumulating burdensome debt as quickly under that
Mhm.
cap, that credit card companies can't charge this sort of excessive interest rate. And that is something that then is going away.
Mhm. Recently, Senator Elizabeth Warren, who was technically one of the founders or people who initiated the CFPB, she wrote to the current acting director, Russell Voigt, that demanded a cap at 10% because right now it can go as high as 25%. A credit card fee can be as high as 25%. What does that do to someone's economic state when they have a credit card fee that can go as high as 25%?
I mean, the unfortunate thing is that we know what this sort of debt can do. I mean, in the immediate term, people are making decisions, trying to trade off decisions about what bill do I pay, how much do I owe, um, and debt is going to accumulate under that higher cap, that higher interest rate. We know that that creates stress for people. So not only is it a question about household budgeting and what money you have then to spend on the things that you need and making decisions about trade-offs there. pay rent or pay your credit card bill or pay your student loan. All of those things really pile up for people quickly. So that's a financial burden, but it also creates stress and anxiety. It can disrupt relationships with people and communities, means people may be taking up um, extra jobs and work to pay down that debt. And is, it can even contribute having, what is kind of referred to as unsecured debt. So credit card debt that's not backed up with like a physical asset, like a home, for example, or a car, something that you can leverage for borrowing. This sort of debt is associated with things like cardiovascular disease, risk for heart attack, depression, suicide. And so there are also these, consequences to our health and our well-being that are pretty significant, with debt that is like, a high interest credit card rate.
And just to stick on the theme of credit cards for a minute, the CFPB now has also eliminated oversight of credit card rewards programs. Why is that problematic? Because some people would say, rewards program, what's the big deal? It's enticing. Why is the fact that they've eliminated oversight a problem?
Oh, there are so many things happening in the CFPB, or maybe not happening. This is one where I haven't spent quite as much time following.
Mm.
And we know that these rewards programs, customers that have lower incomes that end up paying higher fees, that end up having a higher interest rate on their credit card, for example, these products subsidize the rewards programs that wealthier customers can benefit from. So, I mean, one concern that I would have about this is, the rewards that seem enticing, the people who are able to really take advantage of those sorts of programs, have often income and wealth to be able to do so. And so the consumers, people who have lower incomes, who are struggling, who are using these credit cards, and the fees that they pay are building up those rewards, right,
Mm.
for higher income customers. And so I would be concerned about that dynamic.
Okay. What about the fact that there's less oversight on payday lending programs? Explain the dynamic and the predatory nature of payday lending programs.
So payday lending programs, this is like a promise of a loan on your future paycheck. So, in 2 weeks I'm going to get paid, but I need this loan right now. And so payday lenders will, make a loan with a pretty high interest rate. The average is 400%, or at least it has been
400%?
400%, can go as high as 1,000%. Right. And we know like an interest rate on a credit card of 25%, an interest rate on a payday loan of 400% or 1,000%. I mean, there's no policymaker, no banker who would accept that interest rate for themselves. Right. It's an outlandish, just an outlandish interest rate. And people with uh, limited resources. These payday lenders are considered predatory because they take advantage of people who have limited resources. This was one of the key issues that the Consumer Financial Protection Bureau took up after it was established. So, um, 20, 2012, 2013, the Bureau, was really doing a lot of reporting, a lot of site visits around the country, having hearings in different cities around the country to listen to people's concerns about payday loans or access to credit, high interest credit. And they set out this years long process of rulemaking to cap, what they were working toward was to cap interest rates at something much more reasonable, still high, maybe like Military Lending Act caps these loans at 36% for members of the military.
Which is still high,
which is
but
still high.
not 400%, but okay.
Right, right. And so, in the in the years when the Trump administration has overseen um, the CFPB has rolled back some of these regulations. And so this is certainly what's happening now. It's what happened in the first administration, that they stopped enforcement of payday lending companies that were charging these excessive rates, or they, issued fines of $1 or very, small amounts to payday lending companies. And so um, this less oversight now, the rolling back of this oversight, I think is going to allow these 400 or 1,000% interest rates to continue on payday loans, which is happening at a time when um, the economy is a struggle for people. People are
Yes.
losing jobs. Um, People have student loan debt to repay. They have, our healthcare does not cover for all the preventative or even the life-saving treatment that people need. And so this this context, this economic context, in my view, is an opportunity for lenders to exploit people, to make expensive debt available to them as a means of survival.
Mhm. It's a very precarious situation for people who are in a financial bind, and it can happen quickly. I think I had heard you say in an interview that, say someone just needs a stopgap, and they get a loan, and then the interest rate is, of course, exorbitant. You never get out of debt. It's almost as if the moment you take that loan, it compounds exponentially very quickly. Um, and then you had also said something I found very interesting in another interview. I had heard you discuss the fact that a lot of these lenders, payday lenders, place themselves in locations where there aren't banks. Is that accurate? Can you explain that dynamic?
Yeah, one of the things that I've looked at over the last few years in my research has been the physical infrastructure of our
Mhm.
financial system. So we know that there's a lot happening, a lot changing with regard to like the digital infrastructure. So apps available on your phone, high speed internet in ways that, over the last few years has changed. And, banks tend to establish their branches, generally, having on average lower cost loans, more mainstream financial services. That they tend to establish those branches in white communities more often. When they close branches, when they talk about wanting to, eh, you know, wanting people to have the convenience of digital financial services, they're talking about that convenience often for Black and Brown communities. They close branches disproportionately in Black and Brown communities. And then one of the theories of our financial services sector is that payday lenders will move in to fill this void. So, in the places where banks have closed their branches or that they have avoided, um, payday lenders, higher cost, more exploitive financial services will move in to take their place. And I view um, this is like a continuum of financial services, right? Like banks and payday lenders, they're kind of in relationship with each other, shaping the geography of our financial services in ways that are discriminatory and exploitative. And so this is likely something also that um, will not be part of a consumer protection oversight in the years to come.
And I want to piggyback on what you're talking about, how banks and these predatory lending programs kind of work in concert. There's also now no oversight on overdraft fees from banks. Can you talk about that? And how harmful is that to not have oversight on that? How bad can it get? And who does it harm the most?
Yeah. So overdraft fees, this is one of the areas where banks discriminate against customers in how overdraft fees are charged. Like on average, they tend to charge higher overdraft fees to Black and Brown customers, Black, Latinx customers. That takes advantage of people's comparatively limited resources, kind of undermining their economic power, their political power. White people on average have higher incomes, they have higher bank account balances, and they aren't subject to overdraft fees in the same ways. So, on average, overdraft fees tend to be a couple dollars lower. They're charged with less frequency. This even holds true when we look at like how much money or wealth low income white people have. So without overdraft fees at the same rate, they have more of their money that they can use. We know that overdraft fees definitely one of the things that the Consumer Financial Protection Bureau wanted to regulate. Each year, banks bring in, although I can't don't have the number at the top of my head. It's billions of dollars in overdraft fees, which some of their own language suggests, like banks' own language, when executives talks about these overdraft fees, know that it's a place of people's ire and frustration. So maybe there's a business case for them to pull back on some of the overdraft fees, and knowing that this was a place where they were going to be regulated by the CFPB. Um, but I mean, part of my view is that the Trump administration is passing policies trying especially to undermine the economic and political power of marginalized groups, uplifting white nationalist power. And so while some of these policies like overdraft aren't necessarily in the best financial interests of low-income white people, they may be in the interests of a white racial solidarity. And that the rolling back of some of these regulations with their disparate and discriminatory impacts, I think, putting some of the consumer financial protection in the broader picture of the decisions being made by the Trump administration, I think is concerning for how people are able to participate in the economy.
I want to ask you a couple more quick questions. I know we're running out of time. One is the CFPB now with new under the current administration. There was a lawsuit that was dropped against major banks like Bank of America, J.P. Morgan, and who were using Zelle because Zelle was apparently being used as a source for fraud. And a lot of people had been taken advantage of using these apps with these banks. And the CFPB had been, putting regulations in place to protect consumers. Now that's been dropped. So what happens to people who lost their money or who were victims of fraud, and what protections do they have now?
One of the things the CFPB used to do really well was to collect a consumer complaints database. So if you had a problem like this, you could submit a form to the CFPB and explain what happened, and
Right,
they would respond to you and try to track down what happened and get your money back.
right.
Um, that sort of resource is now gone for people. As I've been tracking the complaints database, I mean, you could see a real change in the data collection process in January 2025, between January 2025 and March 2025. So those beginning months of the Trump administration, you could see the dismantling of the CFPB kind of showing up in the changes in how data was being collected and recorded. So that is something that was a real resource that people had when there were problems like this, that you could go and have someone respond to you. Like this case of Zelle, there were a lot of complaints in the database about Zelle, also debt collections. I am not sure what happens now and what happens for people who've lost their money, which is a loss for all of us. Not to be able to have an agency with recourse to, make people whole when there's something fraudulent that happens in the financial sector.
You're absolutely right. And when I had corresponded with you earlier, I had told you that this was particularly personal because I had an elderly loved one who had been the victim of fraud. They were banking with one of the banks in the lawsuit, and it was through Zelle. And I did reach out to the CFPB at the time. This was several years ago under a different administration, and we were able to get some recourse. But it is scary because it happened so quickly and so much money can be lost. And we're talking about a retiree, people who are on fixed incomes, who are often the most vulnerable to financial crimes. So I do, Professor Friedline, want to end on a hopeful note. I try to add a little bit of hope. In this case, I think hope can come in the form of knowledge. And I would love to get 3 tips, 3 power plays, I like to call them, for my guest about what can be done to protect yourself. What can you do as a consumer to protect yourself now that something like the CFPB has been weakened significantly?
Well, I think there are a couple things, and I appreciate your focus on like information as knowledge and the possibility that this information can help people feel empowered and transform then the ways that the system works or improve the ways that the system works. Um, what I have are maybe suggestions that probably feel familiar to people. So the first is that I hope people recognize that it's not your fault and you're not alone in some of these struggles. Um, I You mentioned your elderly relative. I mean, I have overdrafted my bank account so many times. So we all have these personal financial experiences that I think can feel embarrassing, and you might not know who to turn to. And the CFPB was one place to turn to, and hopefully it will be in the future. Um, I think of the household budget, like how we kind of budget and spend our money and what we have resources to do, as a site of political struggle. And so I think if we're socialized to believe that if we can't pay a bill, if we get into too much debt, that it's our personal fault. We have failed somehow, and that this isn't true. So first, I hope you recognize that it's not your fault. There's a whole system at work, um, from how much employers pay their workers, if they pay real living wages, if landlords double or triple the cost of rent, which is happening. Healthcare insurance companies aren't covering your preventive treatment. That's part of a whole system that sets up this site of both financial and political struggle. So you're not alone in maybe having some of these experiences. Another thing is that you can learn and know how things like the banking system, credit cards, digital payments work. You can read about it. So even as we're socialized, to think it's our fault sometimes, we're also socialized not to learn about it or to study it. That's something to be left for the experts. And I think people are the experts of their own experiences.
Yeah.
I'm not an economist or a banker. My degree is in social work, and I definitely don't know how everything works, but I learn more every day. And so, a second thing is I hope people don't feel intimidated about the subject matter, that you can learn about the systems and structures and the financial services that are impacting you.
Mhm. And how simple can that be? Just a quick question. Does that mean just going into your bank, asking what the overdraft fee is for a new account you want to open? I mean, let's get really granular for just the average person who says, all right, I don't want to read a big book about finances, but I want to know what kind of checking account I should open. What does that mean when you go to your branch?
Yeah, it means exactly that. Asking questions, reading the fine print at the end. It means reading, maybe you're going to read a big book, or maybe you're going to watch a short video, um, or some other informational brochure about what the bank then does with your money, how the bank makes its money, and that those are stepping stones to studying a little bit more about these systems and structures. And this, I think, also requires work and time of people. So, in my view, the system is also set up in a way to like have us have limited time to not be able to spend to ask all these questions. And so it does require like a little bit of pushing back, I think, in that space,
Mhm.
trying to carve out time to learn about the things that are important to you. Um, and to, if you're going into a bank branch, there's lots of other things about going into a bank branch that can be difficult or hard. They might not be located near you. They might not speak the language when you get there that you speak. Um, I find that they're pretty um, intimidating spaces, and the people that work there are supposed to answer your questions. So you can ask whatever question you want. That is their job, and
Yes.
to you know um, make sure that they do that for you.
Yes. Yes. Advocate for yourself. Okay. And then number 3, what's your third tip?
Number three, I think, is getting connected. So realizing that you're not alone, um, studying and learning, not being intimidated about the financial system. Um, those are sort of individual aspects to this.
Hmm.
And I think to make those first 2 points real, then a third one is being connected with other people. Find a local organization, um, talk with friends and neighbors, be connected. I think this sounds kind of simple, but if you aren't alone in your struggles, and one way to become informed and empowered is to get more information, that you can also do that with other people and try to change some of your um, sort of collective experiences. So we know that things can change about the financial sector. Um,
Yeah.
they have changed. We know that there are things that can be put in place to protect people and their
Hmm.
money. Some of the things that we have today, like the Community Reinvestment Act, which was established in response to banks' redlining practices, which are ongoing.
Hmm.
Um, you know, that was incited by a group of people in community together. And so getting together with people, organizing together, that that can put some of the protections in place that you may want for the future.
Excellent. Thank you so much, Professor Friedline. This is really helpful. I think people need to know this because it's happening, in the cloak of darkness right under our nose, and it's going to impact so many of us. I really appreciate it. Again, she's author of Banking on a Revolution: Why Financial Technology Won't Save a Broken System. And she's the professor of social work at the University of Michigan. Thank you again, Professor Friedline.
Thanks so much for having me.
And now it's time for Dr. Friedline's top power plays. First, she says, do a mental reset and know that you are not alone, especially if you find yourself caught up in a financial situation you didn't expect or are the victim of a financial crime. Also, she says, ask questions of your financial institutions, where you bank, the credit card companies you work with. She said, make sure you are armed with education. And finally, also, she says, connect with local organizations that can offer support and guidance. Thanks so much for joining us. We hope you're feeling a little more hopeful, a little less stuck, and maybe even inspired to take action, because democracy does work when we all participate. And don't forget, sign up for our newsletter to get updates on when our next episode drops. You can go to my website, democracydoes.com. And as a bonus, if you haven't gotten one, a free and easy tip sheet on how to get involved.